Do I have audio? Do I have sound today? I think I do. Holy moly. All right. Welcome to the morning show, everybody. Happy Friday. Yeah, it's Crypto Friday. We got Louis Sykes coming on. We got Jason Perz coming on. We got no JC, so that makes today a Strazza show. Steve and I are going to be doing some live charts today. It's going to be fun. I have long been a proponent of live charts on this show, so I'm very excited to do some live charts. Let's see. We got to talk about some memes. We got to talk about what do I have? Reddit's moving a little bit today. We'll talk about that. I got a couple earnings on my list. GameStop is selling all kinds of securities to the open market here. Sold to you, and sold to you. So that's what's on my list. Steve has things on his list. You know the drill. If you're watching us live, smash the like, and let's get this show on the road.
Good morning, sir. How are we?
What up, sir?
What's going on?
We're all good, man. We're all good. It's a skeleton crew today. We got no JC. We got no Alfonso. We got Steve. We got me. We got Louis. Let's go.
Perfect. Because we got to talk about cryptos. And
Yeah.
we're going to be sounding overwhelmingly bullish out here today because we're at all-time highs. And then you probably want to give the programming note. No shows all next week, right?
Yeah, no, this is actually going to be our last show for quite a while because we also have the holiday, right? Memorial Day on the 27th, I think. Yeah. So no show after today until May 28th.
Wow. Taking quite the hiatus.
I know. Speaking of, actually, I should mention that the 1 year anniversary of this show is coming up. It's actually going to be, it's today.
Is it really?
It really is.
I knew we were close.
It's today, May 17th. On this day, 1 year ago, we did the first one of these shows.
So in February, I guess, of last year, JC and I were at the Money Show in Brooklyn. Might have been early March. And we said, all right, so we're going to launch this new YouTube thing. And how do we get people to watch it? And he goes, we got to come on every morning and do a morning show. And I said, hell yeah. and now it's 12 months gone by. I've been having a great time. I'm looking forward to another year. Thank you everyone in the chat for supporting us.
Thank you everyone who has watched, who has liked, who has tweeted or retweeted or shared or commented or questioned or hated. We appreciate all of it. And so 1 year down, many more to go. Thank you, chat. We appreciate you. But also, as JC always says, this is in a weird way, a selfish endeavor, right? We do this because it helps, right? I think it helps all of us sort of wrap our heads around things and get our thoughts out there.
We're just talking about markets on here, right? Sure, we're covering all the news of the day. We're talking earnings, but we're really just talking markets, which is what we're doing anyway throughout the day.
That's
JC and I, we come on here and we have our disagreements out in the open now. We used to spend 30 minutes to an hour on the phone every day. Now we just talk it out right on here. And I think it's constructive. It's great.
Are you and JC the Wilbon and Kornheiser of the stock market? Is that what you're saying?
Like Mike and the Mad Dog.
Oh, okay.
Yeah, something like that. Feels that way sometimes.
It does, doesn't it? All right. We'll have Louis on in a few minutes here. So let's do some state of the markets, Steve, and then we'll see where that takes us.
I can go from.
Oh, sorry.
Hey, Spencer. I can go back and forth from the slide deck. From the slide deck to the charts.
Yeah. I have your screen up here.
Okay.
Let's do that. So what's this? What is this? Buy. Excellent.
This is the S&P 500. So we talked about it yesterday on one of our shows. I think Chart Request Live. We're up 11 straight days here.
Is that good? That sounds good.
11-day win streak, right? It's bull market stuff. It's definitely good. But it's maybe not the best time and place to enter new short-term trades or new tactical longs, right? Coming off an 11-day win streak. Depending on what index you're looking at, some are still battling with overhead supply from March here, right? We talked about, okay, if we're back above the prior cycle highs, we could throw up the prior cycle highs checklist in a second when we're done. We're back above the prior cycle highs. This is the equal weight S&P 500 now. We've been drawing it like this. Nice big base. Back above the prior cycle highs. We said that's a big level, big development, right? Bulls are in control. They're in control of the short-term trend. I think you really can't argue that's not the case if we're back above the anchored VWAP from the pivot highs, right? So that's another level we've been using. The next one would be, like we talked about with JC yesterday, we have all of these different levels we can enter at, right? Because we are dealing with some price memory here after correcting for a couple months. Another way you could do this for ultimate confirmation is say, okay, I want it back above the year-to-date highs and something like the equal weight S&P 500, right? We're still a point or two away here. Another thing that's really important, though, that I want to see, sure, a nice win streak for something like SPY is nice, but if you look at any of these indexes really across the board, Spencer, I need overbought momentum readings. And I need it to be a little bit more overbought than, like, I don't know what we got here, like 70.05, right? On Wednesday.
Is that a need or is that a want? That sounds like a want.
It's a want for sure. And momentum will lag at times, right? And play catch up. And we have these divergences that oftentimes we don't want to overthink. So you're right. It's a need. It's a want, not a need. But boy, would it be nice, right? Because we're checking off all the boxes. Just throw up the prior cycle highs checklist quick. Checking off all the boxes right now. And overbought momentum readings would be like just a sweet cherry on top. I do this right? So, I mean, this is where we're
very good.
I'm getting good at this. So this is where we're at, right? All green on the screen. This is our list of key indexes. And we're simply asking the question, are they above or below their peaks from the last bull market? Energy is the only holdout right now. And I think Jason and I both kind of agreed. Energy probably could have been left off of this list. Hasn't really been moving with all the others. But 94, I believe, is our level. Yep, 94. And we're trading at 93.71 right now. So we're basically there in all of these. Another one would be Bitcoin, right? Which we never added to here, but it should be on here. Let's look at what Bitcoin's doing.
Oh, up again this morning. Features, at least.
You know, you're still getting some sort of follow through from these massive candles from Wednesday. Again, use the VWAPs to kind of help guide you through this corrective period. And then when we zoom out, right, Bitcoin looks a lot like these others. Look, we could draw it up the same way. Right, so that's really it. The bias is
It's right there. It's right there.
Risk is to the upside if we're above these prior cycle highs, right? And we're lucky right now, after a little bit of stock market weakness and risk asset weakness, things like cryptos, since, I don't know, February, March, April, depending on what area we're talking about, we can pick some really nice entries and limit our risk in a way that you don't get most of the time, right? So what do I mean by that? If you're not in something like Bitcoin now, you could say, wow, we're back above these old bull market highs, call it 67, 68, right? Then it's go time, right? And I'm long, and I'm risking maybe $1,000 if I'm in at 68 with a stop at 67, right? So if you're wrong, not only will you probably know pretty soon that you're wrong on the trade, but you'll be out with very little losses, minimal loss, right? So use these levels. They're here for us. We don't always have such clean and clear levels, more or less across the board. We can do this in, any one of these sector indexes too, something like healthcare. You want to be involved in healthcare. Look, you have a really nice level to trade it against, right? So we can pretty much do this, not just in all these sector ETFs and indexes, but in individual stocks too. So let's look at.
Yeah, but it's not always going to be as tight. That's like a couple dollar range right there in healthcare because it's healthcare, right? I mean,
Yeah, what do you mean it's lower vol?
no, I mean it's going to be like it would be a wider spread between where it is now and like that logical level of
$3. You enter here at 146, you stop yourself at 143. So you
right.
risk
That's $3. That's good. I'm saying like they're not all going to be like that. They're not all going to be a $3 spread.
And we have individual stocks also that are like that right now.
I mean, how it just depends how tight or loose you want to be with it, right?
Yeah. So this is our shopping list. Look what we're doing here. This is so cool, right?
But I got it.
Something we're messing with internally. All we're doing here is saying we are identifying those stocks that are closest to the prior cycle highs and look like the charts that we just shared, right? That's what we're doing in this column here. So we're not necessarily scanning here by strength or by percentage to new highs, right? We're scanning by percentage to these old highs because we're asking ourselves, do we have a really clean chart pattern here that we could trade, right? So example, microchip, that's a good one. MCHP. Look at this, right? So clean. I think Sean and I got into ADI. We did it on the Flow Show the other day. This one kind of reminds me of that. It's a semiconductor. Slowly working its way higher. All right, so you got a level there, and then you got another level here. Boom. So this is just what we're seeing all over the place right now. And after a couple months of corrective action within the context of a primary uptrend or pretty strong and sturdy bull market, I think we're going to look back and say, wow, the second quarter we really had some great entries, right? That pullback was a gift. So go shopping, make a shopping list like ours. Go get into some of these names that are really well defined and showing strength.
And well, I mean that's also what you do when things aren't going up is you take the time to figure out, okay, well, when this does turn around, what do I want to buy? So if you didn't do that already, yeah, sure, you should definitely do it now.
You already have a list. If you
should
don't
have been doing that, right?
You do have a list. Go pick some things on it. Go shop the deals.
Yeah. Yep.
But the past 2 weeks have been undeniably bullish. Super bullish developments, right? We're checking off all these boxes. Our checklists are turning, green all across the screen. It's good stuff. You're right. A momentum reading. Maybe I'm asking for a lot here, but that would really feel good. As a bull, that would feel good. I want to see overbought RSI 14s across the board. Maybe we'll add a column to our checklist. I actually think we're really overdoing it at this point. We don't need the checklist anymore. It's a bull market, folks. Go time.
You know what else would feel good?
Tiring it. What?
You know what else would feel good? If we brought on Mr. Louis Sykes and did some Crypto Friday.
Exactly.
Louis, what say you? He's ready. I'm ready. We're all ready.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
It's funny that you say it's a bull market because guess what shirt I'm wearing today? Buy the smile.
That's right. That's right. Everybody's got their bull market shirts on. Good for you, Louis. Love to see it. Love to see it. Do I need to
Hey, I need to go get a Hawaiian shirt or something. That's a true bull market shirt.
Yeah,
we have lots of those. Got a closet full of them.
I think I need to get myself one. It is a bull market after all.
We'll get you a Hawaiian shirt out in Sonoma. I think you're supposed to dress like a cowboy out there, right?
I thought it was wine country. It's bougie, isn't it?
I wouldn't know. None of us would know.
They're like old Western towns. They're like cute little cowboy towns.
Yeah, Louis. There a lot of them. There's old from the OG gold rush, right? Like the actual gold rush, old mining towns from that. So
they got gold in them hills.
Yeah,
I can't wait. I can't wait to go walk on those hills. Go do some hiking.
Red gold
and white gold. All right, let's talk charts. Louis, what do you got for us? You got his chart of what is this? Solana and ETH.
Do I need to do anything with my screen here?
I got you.
Look at us. Yawning kitty.
So
that's great.
Look at this. So I'm wearing my Buy the Smile shirt today, and that's just a perfect example of that. So we know that markets are fractal, so the same patterns that occur in low time frames, they occur in high time frames as well. And we've seen this play out in the Solana Ethereum ratio here. So this is just simply pricing Solana in Ethereum. When this line is going up, it just means that Solana is outperforming ETH and vice versa. So on the
Yes.
left-hand side, we're looking at the long-term chart. On the right-hand side, we're looking at the short-term chart. And they look quite identical, right? They're both forming cup and handles over both the short and long time frame. And so, if anything, if you're looking at this chart, it would seem to suggest that Solana is set for a period of outperformance into the back half of the year.
I love it.
I like that. As someone who's long and strong, I like to hear that.
How about the relationship between Bitcoin and Ethereum?
Yeah, so look, Bitcoin has really been outperforming. ETH has really been struggling. You look at the ETH BTC ratio, it's just continuing to move lower. You could say that is surprising, but at the end of the day, we're never dogmatic in our approach. We always let money flow dictate our execution, never narratives. And so ETH is just underperforming, and it's just as simple as that.
Do you think crypto investors, are you a believer in owning some sort of legacy position in the blue chips? And would you include ETH in that with Bitcoin? Like, do
Yeah,
you
absolutely.
think
I mean, if you've got a long-term diversified crypto portfolio, then ETH has a role in there.
despite this relative weakness over really across most time frames now, you still got to own it.
If it's just a simple diversified buy and hold crypto portfolio, then yeah.
I'm with you. I think it turns it around eventually. You know,
Eventually, but from a trading perspective, we just need to see it happen.
I feel like, and again, we need to see it. We need to see so many things as technicians. We need to see it all. But it feels to me that crypto is doing a pretty nice job of following the stock market, right? We had a nice big update. You see these bullish engulfing candles on Wednesday
Exactly.
in the cryptos, right? Stocks have been good for two straight weeks now. Maybe cryptos wake up. And if you look at the dynamics that are playing out in the stock market, this is a story not so much of rotation, but of broadening, right? It's a broadening of the rally. At what point does that also happen in the crypto market, right? That rally broadens out a lot. We've talked a lot about how the altcoins really haven't been giving us much this whole cycle, right? And it's been a bad start to 2024 already for them. At a certain point, as this bull market, churns on, I think you have to have that participation. And Ethereum would be at the top of the list that I would expect to eventually not just start trending higher, but take on some sort of leadership role, at least for some, short period or intermediate time frame before this whole bull cycle is said and done.
Yeah, I'm with you. Only a small number of cryptocurrencies in the top 100 actually outperformed Bitcoin. I'm pretty sure the number is only 15 of the top 100 last year outperformed Bitcoin. And so it's
That's
really
amazing.
quite,
That's thin,
yeah.
really thin.
And so it is thin, and a lot of that has been driven by the increased demand with the Bitcoin spot products. I think that plays a big role in that rotation. But then more shorter term, you've seen equity markets recover. You're seeing a lot of indices trade at new all-time highs. And Bitcoin and crypto markets have really, they're still trading near their lows of their range. And so it's a case of when I came to the show last week, we talked about how there was a catch-up trade emerging between crypto and legacy markets. And you're seeing that play out now, where the correlation that exists between macro and crypto is very much present. And when you get these brief dislocations, they tend to be exactly that. They tend to be brief. And now you're seeing Bitcoin and crypto markets catch higher.
How important are interest rates in the dollar to you?
Oh, someone's got a train in the background there.
You hear that?
Was that you? There shouldn't be a out in the keys.
I have no idea what that noise was. There's no train here. Probably, probably both.
Yes. I'm sorry. I just lost my train of thought. That train is just.
It was loud. Sorry, guys. All right. No, dollar interest rates, right? Intermarket headwinds, really, this year. Do you need those to flip into tailwinds, or do you need them to just do nothing? How important is that to a bull thesis for crypto?
Well, risk markets have done pretty well in the face of a strengthening dollar this year.
That's right.
But if you do get further weakness in the dollar, that's certainly going to be a tailwind, and that's going to help drive crypto markets to new all-time highs. And so when you look at what's happened over the last few weeks and even over the last month or two in crypto markets, this has really just been a garden variety bull market pullback. I know JC hates that word, the garden variety, but it really just has been exactly that. You're seeing a lot of retests of base breakouts. You look at something like Avalanche, Solana, they're just retesting these base breakouts. We've seen a bit of a reset in positioning, a reset in profitability, which is one of the charts that I shared to you there, Spencer.
Oh yeah.
And it's really just a garden variety pullback, and now we're beginning to work higher.
Sorry, Scotty Scheffler just got arrested before the second round of the PGA Championship. Did that just happen?
I was just catching up on that from when we inevitably talked about it.
What's happening?
Sorry, Louis. I got money to win the PGA Championship.
The best golfer in the world just got arrested for a apparent traffic misunderstanding, trying to get into the tournament that he is probably going to win.
Wow, that's crazy. Okay.
Wait, back to the crypto for a second. I saw you use the term garden variety in the Daily Note this morning, and I laughed because I love that phrase, garden variety. But that's what it is, right?
Exactly. So what we're looking at here is the short-term holder SOPR. So it's very complicated. The jargon, crypto people, they like to make things sound a lot more complicated than what they really are. But what we're just looking at with this indicator is the amount of profits or losses that are being realized by traders on chain. When SOPR is trading above 1, it means that profits are being realized. When SOPR is trading below 1, it means that losses are being realized. And so in this bull market, we've been in a sustained period of profit realization. But then you see these dips below 1, which I've marked with the green circles there. Those are brief periods where traders are realizing losses. Now, you got to think about it psychologically, right? In a bull market, you are reluctant to sell at a loss. And so when traders begin realizing losses, people are reluctant to sell. That dries up selling pressure, and then that generally marks the bottom of a bull market consolidation. We've seen that virtually with every consolidation over this bull market. And it just looks like another, again, garden variety pullback. You've got that dip below 1, and now we're re-entering into a period of profit realization. And so as far as I'm concerned, the move is higher.
Should we see how many times we could say garden variety with the big
I just think it's a great phrase.
There's a bull market and garden variety as well as price action.
I'm so glad it finally caught on after all these years. Louis knows I caught some heat for this one for a long time.
Huh? That's a common phrase.
Oh, JC's been making fun of me for years about saying garden variety. It's hilarious. It's been an internal joke.
Oh, okay.
So I'm just so proud to hear Louis just busting out like this.
Well, JC isn't here today, so I can say whatever I want. Just like you guys can talk about earnings or whatever fundamentals that you want to talk about today.
But then again, today.
Exactly. I love it. Not with me, though. It's Crypto Friday. There is no fundamentals, thank God. But then when you look at the CCI 30, which is a market cap weighted index of the 30 largest cryptocurrencies, again, just pulling back into a very logical level, the 38.2% retracement of this entire bull run. Never hit oversold conditions. Now buyers are stepping in. Just seems, pretty standard pullbacks here.
If you look at simply the momentum profile of this chart or Bitcoin, right? We didn't even get close to oversold. Momentum stayed firmly in bullish range. So that actually says a lot too. We've been correcting since March. So it's been 2 months. Not oversold, not even close to oversold. I think that stands out, right? It's worth noting.
Yeah, and it's interesting. We actually did see a massive spike in the percentage of cryptocurrencies hitting oversold on throughout this correction. So to your earlier point,
right,
there really has been quite a thin market rally, and then even on the down leg, altcoins have really just been lagging behind.
How about new highs, Louis?
Still flat.
I know it was one day, Wednesday, but a big day for some. Did short-term new highs do anything?
No, virtually flat.
Damn. All right. What do you think about the VWAP from the year-to-date highs and using that.
I know you've been loving your VWAPs recently,
Course.
and I think you've been really onto it. It's a really I was watching the show yesterday, and you were pointing out that there's essentially 3 ways that you can play an entry point in crypto markets right now. You could just buy the retest, so that's buying Solana at 120, buying Bitcoin at 60, buying Avalanche at 30, buying weakness. You could buy strength above these anchored VWAPs, or you can be even more conservative, which I'm pretty sure Jace is in the camp of, where you want to see further confirmation of new all-time highs.
Right.
And so this anchored VWAP is where a lot of cryptocurrencies are trading at the moment. So we've seen a little bit of strength away from the lows. So the first entry point is a bit far away. Now we're at the second entry point with these anchored VWAPs.
You agree, though, that that's a pretty solid roadmap for getting involved, right?
Absolutely.
So let me just throw one up. Throw my chart up, Spencer. You agree with the way I have the Solana marked then? And then I guess we would do something like this.
I love this. The live charting session.
Yeah, this is amazing.
And you could have, right? Like I know I mentioned, shout out Patrick again. Be hanging out with Patrick tomorrow.
Hey.
In San Fran. Yeah. Eating Chinese food and shit. Can't wait. So look, could have done this too. Pat was in at 120, right? In bull markets, you can take this shot. You don't want to do this in a bear market, right? Just buy weakness into a level that you're ultimately just hoping access support, right? But you can do that in a bull market. I really think so. We can get more aggressive in our entries, right? If you enter here at 120, all you're doing is making it so that your return profile is juiced, right? As opposed to entering here at the VWAP at 150, it's 30 points higher. Sure, you have confirmation. It'll be a higher probability trade, right? Because you're entering on strength. You're entering $30 later, right? So everything's a risk-reward equation, but it's also, you also have to be mindful of what are the probabilities, right? I'm entering here on weakness. Okay, now I'm entering on strength. I'm entering at new highs, even higher probability, lower risk-reward profile though, or a less favorable risk-reward profile. So I think with Solana, we do have all these levels. I think seeing it take out the anchored VWAP from the year-to-date highs is big because I want to see Solana lead, right? It's like seeing, I don't know, Google or NVIDIA lead, in my opinion. Right? This is one of the strongest momentum names last cycle, this cycle. I want to see it out the gates first. And then I think the next stop here is 210, 205, right?
Exactly. And going back to the relative chart, Solana's set up for a nice period of outperformance into the back half of the year.
Yeah, so this is a Sol ETH chart that Louis was talking about before. Looks great.
And then if you zoom out on that,
wow, look at this. Fantastic. It looks
big faces. Buy the smiles.
It looks a lot like Solana Absolute, doesn't it?
It does. Yeah, exactly.
So we are on the precipice.
So not only do you want to see Solana or whatever asset you own move up higher on an absolute basis, but you want to see it move higher relative to its counterparts as well as its benchmarks. You're seeing that with Solana.
Especially in crypto right now, if you're buying anything but Bitcoin, it better be because there's relative strength there. And like you already said, Louis, it's a very short list, right? So make sure before you enter any of these crazy altcoins, you're looking up relative to Bitcoin or even ETH, right? Like we did in the case of Solana here. And you want to make sure that leadership is in place.
Relative strength, folks. Relative strength. Very
important. One more for you before we send you on your way. Don't you have a flight to catch?
I don't fly out for another day.
All
right then.
Yeah. I'll be hanging out with you guys in San Francisco if I got there a day earlier.
I know, that would have been cool. I didn't even know Pat was going to be there.
It's always a good time when Pat's around.
Romantic weekend with his girlfriend. I'm going to crash it.
And so you're just third wheeling it with them?
No, my girlfriend's coming too. We'll do like a couple stuff. Yeah.
Nice.
Listen, crypto equity market vehicle. Best one right now. You get to pick one. You get one.
I feel like it would probably be one of the miners. I mean, MicroStrategy looks really nice. Even something like Clean Spark.
Wait, what was the
Cypher mining.
question? The best vehicle to do what?
To express a bullish thesis on crypto
Okay.
via an equity market vehicle. So
Okay.
preferably a stock. Don't give me this IBIT. All right. So Wetch Miner. Wetch Miner.
I was gonna say IBIT, no joke.
That's why I asked Louis.
Clean Spark, Clean Spark, Cypher mining. Those have been some of the stronger miners in the space for a while now.
Yep.
And so Bitcoin miners have really underperformed. I think, looking into the back half of this year, I think Bitcoin miners are setting up quite nicely.
Yep.
But these are two ones that are really shaping up quite well, particularly relative to the remainder of the industry.
So the primary trend for Clean Spark is higher, right? The reversal's in. Looks great. Looks great. And it's just climbing up the right-hand side of this base, right? So underlying trend up. Patterns like this, right, that we can draw like this in the context of bull markets tend not to be this. In other words, these tops tend to fail and end up as continuation patterns instead, looking something like this. Right? Got the VWAPs dropped here. You could play this the same way we just discussed with the Solana chart, Bitcoin, right? You have all these different levels. And on a failed top, you typically get confirmation. People would draw this like a head and shoulders, right? You would typically get confirmation when you eclipse or recapture one of these shoulder highs, right? So the right shoulder high, in this case, in Clean Spark is right around 2090, right? That's how I would do that.
And before I go, I want you to punch up the Bitcoin miners relative to Bitcoin chart. I look at that quite a lot. So that's the ticker symbol WGMI relative to Bitcoin. So he already knows the tickers off the top of his head. I love it. And so if you zoom out just a little bit more, and you've got those former lows there. And so we're really battling against those lows. And so we all know that Bitcoin miners, just looking at this chart here, have really underperformed. But if we can get back above these former lows, then the squeeze is on for these Bitcoin miners, and you could see a bit of a catch-up trade emerging here.
I love this, Louis. I love this. This is great, right? So this is a nice little scoop and score setup here. Again, gotta see it, right? But something like this. And if we hook, what is that telling us? We're back into an environment where the miners are outperforming Bitcoin. So would you want this higher above these pivot lows before you get long something like Clean Spark? How important is that? Or would you do Clean Spark relative to Bitcoin in that case, which looks far better?
I think it would be quite nice if you did get that ratio above those lows. I think, you could potentially play it with a starter position. If you want to play it aggressively, then add exposure. Again, there's no right or wrong way to do this. It comes down to your personality and how you like to play these. But the point stands, if we get this ratio above these former lows, then the squeeze is on.
I think these little exercises that we just did, going through all these charts and talking through these different trade ideas, the one recurring theme is relative strength. Right? Only get involved if there's leadership there. Even short-term leadership, right? In the case that this chart hooks higher back above the pivot lows, a little bit of short-term relative strength, then you feel better being in these longs. That's the case with anything. We're always going to go back to the relative strength. Right,
relative strength. Who would have thought that's so important, eh?
All right. Get him out of here. Let's get Jason
out. That was sarcasm. I got that, Louis.
All right.
Up on that.
You're the best.
See you in California.
See you in a couple of days, man.
Yeah,
looking forward to it.
Guys, by the way, if you do not get Louis' crypto research, you damn well should. The link to that is at the very, very top. It is the first link in the description of this video on YouTube. Is the link to Louis' research. Check it out. He is doing tremendous work. Okay. Shall we bring on Mr. Jason Perz?
I had some money on the Rangers last night too, stock market Mike. Let's go. Knicks tonight.
I hate the Rangers, but I watched the end of that game and didn't enjoy it as a Devils fan. But what you can do,
I had some friends text me about the Bang Bang recess yesterday. It's really catching on. People love it, right? People
That's
just
good to know.
We're gonna do a couple Bang Bangs out in Sonoma.
Okay, I'm ready.
You're only there for a couple days. You know, sometimes you gotta eat meals twice.
Bang bang, dinner, bang bang. All right, Jason, let's go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jason,
Hey,
what
what's
up?
up, Spencer? Hey,
How we doing?
good, man. Just ready, excited to be on with you guys today. A lot going on in the markets. Just excited to kind of come on and talk markets. I had some great charts I was just kind of going through this morning, and I was like, man, there's so much going on, so much to talk about.
You were kind enough to send a couple our way. We've got a lot. We've got relative strength and breadth improving. We got meme stocks still doing their thing. There's a lot of things going on out there.
Yes, absolutely. So, I mean, the dollar, China, sectors, copper. I mean, it's endless. Like if you're a macro trader right now, you could just continue to go through all these forever and ever.
But I want to know. So you sent over a few slides, Steve. They're in the deck. The first one is about junk bonds. Is that intentional, or is that just how it happened?
That's intentional. Yes.
Okay.
What was it? HYG?
JNK. So the actual junk bonds. Oh, there we go. Okay. So the reason why I sent this first is most of the time when everybody's looking at the markets, and as a macro trader, like you got to really kind of go through everything and understand how things work. And most of the time the flows start really with the junk bonds. If you're looking at things like small caps, you're looking at buying internationally, because it's mainly this risk on environment that we're looking for. And so now that we're kind of seeing this risk on environment and we're kind of seeing junk bonds kind of perking up, these things have been getting killed for years. Finally, you know, it did break down recently. It started to come right back up. It recently had that false breakdown signal. So most of the time when you see that, you can start to look to other areas, small caps being one, emerging markets being another one. I think so many people kind of get stuck in the fact that, hey, if it's junk bonds and I don't trade junk bonds, I don't need to do anything with junk bonds and screw them. But really, there's just so many markets are very dynamic, and you have to really look at risk on indicators. This is one of my favorites.
And how about credit spreads? So we'll typically just take something like this and throw it in a ratio with treasuries, and that gives you an inverted look at credit spreads.
I do use JNK to TLT or HYG TLT. I do look at them, but however, they can sometimes, like especially in inflationary environments, they get so out of whack. As you've seen lately, you know, like they've gotten completely out of whack at times. Not saying that they're not valuable. They are. I mean, every ratio gets out of whack at times. But in this inflationary environment where we kind of have bonds just kind of getting hammered day after day, it's not really showing the normal risk on indicator that we usually see. So I like to look at it just junk bonds alone, and then I'd look at JNK, TLT, and then kind of go from there.
All right. You came on, you said China and copper in the same sentence. Was that intentional?
Absolutely. So we actually had a report recently, which was China, the invisible monster.
What the hell do you call this?
Oh, that's the dragon pattern. I have no idea. You know, it's
inverted complex head and shoulders.
Yes. So basically you start to build it. Number one, I build my charts as they go. And I'm seeing, okay, we're going to have a head and shoulders building, not to mention head and shoulders that people draw them like they have to always be flat and the breakout line has to be flat. And that's how it goes. That's not true.
100%.
Yeah. So you can draw them any which way. And most of the time what we're looking for is that consolidation to those breakout zones. For me, that's not even as important as, hey, we gapped over a 200-day moving average. Like when we gap over a 200-day, when we gap over major resistance, that is incredibly important as a trader. One, it's showing you that these price levels here, where you thought resistance was, there's not resistance there anymore. It is gapped completely over it, and it didn't look back. Now, most of the time we have these huge gaps over things, and they're going to come right back down. They're going to bonk that 200-day. They're going to do something. This just gapped and go. You know, when we have a gap and go, and we also had high volume on that gap, that's really telling you that something has fundamentally changed. Now, something Steve and I talked about recently, and not like a bunch of times, we wouldn't invest in China, basically at the beginning of this year. I don't know about buying China. That sounds kind of crazy because it's in a downtrend. And as a good trend following technician, like, you don't just buy things in downtrends. That's absolutely a ridiculous thing to do. So you wait for some sort of confirmation. So for me, we ended up getting that right in March. We got a 50-day high. That's the first confirmation. So we go to a half signal there. And then we finally gapped and got right at that gap point and right above that 200 moving average. That was a 100-day high. So we made a 100-day high after that, which goes to a full position. So really, it's like this trade is continued. And I think the one thing that's incredibly important to remember about China here is that still everybody hates this trade. Nobody likes this trade yet. Everybody says China's still going to fall. China's terrible. It's a terrible investment. Fundamentally, emotionally, spiritually, whatever you want to say, like, basically
it's uninvestable, Jason. It's uninvestable.
Uninvestable. And that's honestly, to me, and that's why when people say things like if you marry the fundamentals and the technicals, or if you use both, you're great. I think the best trades happen when the fundamentals make 0 sense and the technicals continue to move, and at some point the fundamentals come into play, and that's usually the end of the trade.
Yeah. Throw up my chart. I think this is great. We have different tools to help us identify whether or not a move can be sustained, right? So something like this, Jason's talking about really the emergence of a fresh trend, of a new uptrend, right? You want to see momentum accompany that big time. So I'm always looking for initiation in the upper pane here. Forget RSI for a second. Okay, we're measuring momentum the way it was always supposed to be measured, by the rate of change. Simplest, most basic way to measure momentum. This is a 4-week rolling rate of change up top. This is FXI in the chart pan. We haven't seen a 4-week move like this since, I guess, 2015, just top 20%. But really, go back to 2009, right? This would be the financial crisis lows. So we are coming out of this bottom with some real starting point momentum. And that's exactly what you want to see. So I think maybe you don't enter China right here today after such strength, right? Look at the last 4 weeks candles, but this needs to be on your shopping list. And China probably has a really strong finish to the year and is probably going to emerge as a global leader at this point because they've been a laggard for so long.
No, I completely agree. And that's something that I think so many people don't look at is one is things that are moving down and people have forgotten about and people hate are some of the best trades you're ever going to find. And so I love this chart. And some people will probably say, hey, also look at the momentum. That was kind of a topping period. Well, we're not near, these crazy overvalued levels, per se, overvalued levels that we saw in 2008 or 2007. We're not anywhere near those levels. We're coming out of these major lows. We're starting to just move up here.
Are you talking about the valuation of Chinese equities?
No, I'm just saying I use the term in a different way. So once again, it's like when people say parabolic move or something, that's what I think of overvalued people. But once again, I have no idea what the PE ratio is for China. I have no idea.
Low. It's very low. It's historically low.
I'm sure. But once again, that the charts tell us that. The charts are saying that they're low. There's people that are interested. There's people that are interested in buying it. Now we're seeing these breakout zones. Now we're seeing this continue to gap out and move higher.
Yeah. Believe it or not, this PE that we speak of, it's actually calculated using this P right here.
I know it's weird. It's one of the P in that. What does that mean, Steve? I'm not sure.
I'm not quite sure the earnings in China.
I knew it.
Rock solid.
I knew this was coming. At a certain point, did you hear the who was it? Was it Citron Research? They are slowly getting on board though, right? So we had the David Tepper news, right?
Yeah.
So he's saying China, great. Shout out Carolina Panthers. The Citron Research, which I believe is Andrew Left, his crazy firm, they put out a bullish note on Alibaba comparing it to Amazon, I believe yesterday. So they're coming around. They're coming around. Listen, China's always been one of those areas that everybody has an opinion on or some sort of position, long or short. It's one of these just like battleground asset classes, Chinese equities, right? So people will get involved, but I mean, we're just so washed out. We're so washed out. We talk about how so many of these global indexes look great. Guys, I'm zooming out.
Well,
this is the MSCI China ETF.
KWeb is still in a 70% drawdown, Steve.
You can't find other countries that look this terrible. It's hard. I could show you some. I could pull up, we could go. We have a whole world. We could find them. But typically when you zoom out on a chart from overseas, it looks more like this. The base is moving in the other direction, right? This is Germany or France, right? This is what we're used to seeing when we zoom out back to the pre-financial crisis highs on international indexes. Then we look at China, and boy, does it look different. So coming off the lows here, what a logical level for a bottom to form. Same as the financial crisis lows, same as the 2022 lows. All right. So now talk to me about copper. Why should we, what does copper have to do with China?
Well, actually, I have an entire list of reasons, actually, Stephen. So, but really, like when you're looking at the commodities story, you also always have to look at China. China demand. China is one of the largest consumers of primary commodities. Then if we look at growth, same thing. As China grows, it requires more raw materials to fuel its development. So we continue down that road. Inventory. China sometimes stockpiles large quantities of commodities. And most of the time they are doing this in preparation of whatever going forward. There's lots of reasons, war, there's lots of conspiracy reasons and so on. However, that's just how it goes. We have also policy reasons. They have anytime they put out a policy report, anytime they change their monetary policy and so on, it usually affects the commodity space. So China is, if you're looking at a chart of China and you compare it to copper, and when copper starts to move, China starts to move and so on. This happens so much, and so many people don't pay much attention to it because people don't like to look at the commodities and the correlations within the commodities. This is a chart we put out. Now the first arrow, the blue arrow on there, I didn't mean to still have that on there. That's when we had our breakout zone. Our signal was right there.
Explain what you're doing in the upper panel here with the bands.
Okay. One of my favorite things. So when we're looking at markets in general, for me, anything I'm trading, I'm always looking at the volatility of the product, meaning I'm either looking at it through options or I'm looking at it through Bollinger Bands. So when we have a very tight band squeeze, so what Bollinger Bands do, they expand when you have more volatility and they compress when you have less volatility. And so as we had less volatility in copper, most of the time that's signifying that a big move is coming. One way or the other, it doesn't tell you which way to move. You could see some volume, you could look at volume analysis, you could look at relative strength, something to just kind of understand. But most of the time, it's not going to tell you the direction of the move. However, what you do is wait for that breakout. So it hit that breakout zone. You can see exactly where it hit for us. We got long copper. It's continued to move to the upside. And then right up there, there's that very large resistance zone. And really like where the most bars are now, basically, if you're old school technician, if you ever work with somebody who's very old, which I have had the pleasure of doing that, is they'll take a pencil or something and put it right on a chart and go, okay, this is where the most bars have hit. This is where the most resistance is going to be. So actually, if you look at copper, we're actually above that zone. No, we haven't crossed all the closing highs yet. We've crossed all the closing highs, but we haven't closed above all the closing highs just yet. But if copper gets above all those closing highs, I can't tell you where exactly this thing could go. It's a monster. There's a major supply story here. There's a major demand story here. So I continue to think copper is going to be a leader going forward. Out of all the metals, I like a lot of the metals right now. So we're long gold, silver, copper, and platinum actually. But copper really has the best chance of continuing higher here for a macro story or a fundamental story if you need to do that scary thing. But basically, the trend is your friend here. You know, continue to ride that trend. Not saying, once again, I wouldn't buy here, just like Steve said earlier about China. I wouldn't go in and buy today. You know, I would wait for something else to set up a new consolidation sideways to move higher. Anything but just buying here, because we're just running straight up in resistance. And something also we could talk about a little bit, Steven, is there's 3 different styles of breakouts that I teach people that I've learned over the years. One is a grade C breakout. Grade C breakout is exactly what you see on this chart. You see a huge run. You see a huge run right into resistance. And if it breaks out above that, most of the time it's going to come right back down. And what that means is, think about it like a football field. If you're on a football field and there's a wall at the end of it, and I run across the entire football field and I try to take out this wall after the football field, I'm going to be really tired by the time I get there. Right. But if I get a little bit closer, I have a better chance of taking out that wall when I get there. I probably can't run through walls anymore, but let's say I could. And we run through that wall after we're a little bit closer, and that would be a grade B breakout. So a grade B breakout is kind of where you have a large range moving sideways. And then there's a grade A breakout, which is this one you see right before this move in copper. That's where you have very tight volatility. And then you get that breakout there. And most of the time that breakout really is the one that leads and starts new trends. It's the highest win rate breakout system that you can run.
And
so
it
I
more of a consolidation than the other two.
Yes. So the think about it like a large range for grade B. Grade B has a large range kind of breakout. Think of small caps. Small caps, perfect example. Small caps recently, you know, made that bottom huge range and then it breaks out. That'd be a grade B. And then a grade A is this one right here. We have a very tight pattern. We're even seeing new lows in band squeeze. We're hitting those band squeeze levels that we haven't seen in a little bit. And then we break out higher. So I think that was a very sustainable breakout. If we broke out here in copper, let's say it just keeps running, I wouldn't say that's nearly as sustainable as that breakout.
So is it fair to say, summarize all this, you really want to see a little bit of digestion or consolidation at this breakout level, maybe a little coil form, right?
Yes.
Filling a bit, then have it go.
Yes. I mean, what I really want to see more than anything is, and this is just like hopeful stuff, you know, once again, this isn't something that I'm going to make happen in the market or look for, but if the market goes sideways here, and then it starts to just consolidate right around that blue line here, and then it started to break higher, that's when I would say, okay, that's a perfect time to buy that breakout. But right here, if it just keeps going higher, I wouldn't say it's a great time to buy that breakout.
I'm along Freeport.
Nice. The metals and mining sectors, SLX, XME, these things are actually look great. I think so many people have consistently gone one direction or the other on those, and they like either hate those type of ETFs or not. You know, I really think those are some good ETFs that you could absolutely like consistently continue to look at, find value in. You know, not to mention just the individual stocks, like you did. If you're buying copper miners, buy the biggest ones. Do not go in and try to find the small cap names like Steve talking about right now. Like that's a perfect one to buy. That's one that you're going to want to buy and continue to hold over time. Like that looks great. It's a beautiful chart. It looks just like copper. It's right near the highs. It's even consolidating over the old highs, which is a really good sign. That usually ends up in a move higher. Those consolidations over the old highs are some of the best indicators of a move higher that you're ever going to see. If you backtest that and take the time to do so, that's something that you can absolutely trade again and again and again and continue to make money.
What else you like right now?
So the commodity space has been quite interesting. I really do like gold. I really do like wheat. I really do like a lot of the commodity space has just been something that's been really interesting. So in this chart, this is showing you that breakout zone. So what we've seen over the last 2 years, that initial move higher in gold is 2020. So it basically topped around 2020, end of 2020, into 2021, I think. So it just chopped around right there. So when we're looking at gold, what we're seeing now is finally we're moving higher here, and we're seeing a sustainable move higher because we're also seeing the gold miners moving up. So when we see the gold miners, silver, some even junior miners, that's basically telling us that we're seeing risk on in that market. Right now, we haven't seen risk on in the gold space for a while. We haven't seen risk on in the gold mining space for a while. And I think so many people get so stuck in, hey, this didn't break out, hey, this didn't move right, but we've never seen the gold miners moving yet. So now that we're seeing the gold miners moving, this run looks very sustainable. I think people could continue to look at other areas inside of there, even the junior miners, the gold miners. Platinum just had a breakout recently. So all of these things are basically telling you that the gold space could continue to run here. There's no reason to start betting against it or think, hey, it's high, it's overvalued, it's this, that, or the other thing. It's kind of telling you it could move higher. Once again, just like everything else, wait for your buy signals, wait for flag patterns, and in trends, you want to see flag patterns, and then you buy the continuation, then another flag pattern, then you buy the continuation. You don't want to just continue to buy because someone on, like me or someone on TV said to.
Jason, when it comes to gold, how far down the market cap scale do you go in terms of looking at these miners? Are you thinking with the majors, or do you go to like junky stuff?
I go all the way to just the juniors. I don't feel like I have much of an edge in the emerging producers.
Yeah.
I don't feel like I used to work with people who had a great edge in that, and they researched it and they did every single thing possible. And then I'd watch them get killed in that market because some policy would change in some country like Peru or whatever. So once again, it's like, with everything, I really kind of think the way to go is stick to especially for traders in general. Like if you're going to be a stock trader, you're not investing in the very, very long run. You're trying to trade in and out of things. Like buy this large cap names. In the ETFs, I only buy the GDX and I only buy like large cap ETFs because most of the time, if you're looking at an ETF, let's say you're looking at IWM, for example. You buy IWM, and then one of your best stocks that's creating all of your performance for the year starts to get so big that it gets kicked out of that ETF. That's what happens. And for me, I like the ETFs because they have a trend following system kind of built into it. So as they have a trend following system kind of built into it, what that means is as the name like Apple or Microsoft gets big, or NVIDIA even gets bigger in the SPY ETF, that's going to drive most of its performance, meaning it does have an idea like a trend following system where you continue to buy strength going forward. And that's what we kind of do as technicians, is buying relative strength. So I think that's the edge in really owning ETFs.
Yep, I agree. These cap weighted ETFs are some of the best momentum strategies in the market.
That's why I love them too. I'm an ETF guy at heart.
Yep. I think the ETFs honestly are so many people. I think people get bummed on it, and it's like, man, you can, because I had somebody tell me years
Who
ago.
gets bummed on it? What?
People have told me over the years that you can't have good performance buying and trading ETFs. I've had so many people tell me that over the years, and it's always individual stock pickers and guys who make their name off of picking stocks, and really. Yeah, and really, like it's kind of funny to think about because it's like I've put together great performance for many years using the ETFs. So we have two different portfolios. We have the ETF portfolio, and we have a futures portfolio. And the ETF portfolio performs great. And I think people think that to do well in trading, you have to find these names that are going up 400, 500%, and find meme stocks, and especially like it's coming back, like. We all lived through 2020 and 2021 where the meme stop thing was kind of going through the roof every single day, and nobody could talk about anything else. And as a fund manager at that time, man, that was quite interesting because I'd have people writing me, like, we had great performance those years, our best performance ever. However, they'd be like, my nephew bought this thing and he made 2,000%.
Yeah.
And I'd be like, well, did he keep the 2000%? They'd be like, well, a year later, no, he doesn't have any of that left. And and that's really the only difference between a retail trader and a professional is like, instead of making money and losing it all, I just keep a little bit more of it nowadays.
Robert Dunning in the chat asked about the 3 times leverage stuff. If it's part of your trading strategy, cool. It's not my thing personally, but they exist to be traded. So,
All right, I got 3 charts I want to show you guys. We're gonna play a game.
Yes.
Oh boy.
Okay.
First one. Are you ready?
Nope.
Okay.
Now I'm ready. Throw it up.
Okay. What's this?
Let me just mark them real quick. These are monster bases, and they tell me it's a new commodity super cycle. So gold, according to Ian, usually kicks off commodity bull markets or is a first mover. It's what we have here. Gold breaking out of a monster base to new all-time highs. Copper, also metal, albeit a different metal, has a similar structure here. Right at the upper bounds. Jason was talking about, what he wants to see from a breakout standpoint. But we're there, right? Copper looks to be getting it done for now. Gasoline. Notice how I could draw these all in the same way? Is it as simple as, hey, look at gold. It's already gone. The other two, copper and gasoline, are going to follow, and copper's already on its way. In other words, do we look next to energy futures and say, similar base, probably going to break out as well because copper and gold are going?
Yeah, I completely agree with that. So, it's my research on that too. I've done a lot of back testing on that, and gold really does kick off the cycle. Yep. Gold usually is the one that breaks out first. Think of 2020 even. 2020 gold was the one that pulled back the least of all the commodities, and then it started showing relative strength, and it continued higher and higher and higher. And that was the one that led the way. I think that peak was maybe in August, if I remember correctly. And so we have that kind of blow off top in August. And then in November, everything else started to move as well. So then you had oil. Oil was the one that had that false breakdown signal. God, I can remember that market very vividly. But oil had that false breakdown signal. And then it gave a breakout signal. So basically had a false breakdown in October. And then right in the beginning of November, it started to break out. Energy had that huge gap day, if you remember. It had like a 10% gap up in XLE right at the beginning. So you had that huge gap up. Yep, all the way down there at the end of 2020. So you had that huge gap up down there. And we continued to just move higher for 2 straight years after that. So energy started to move, copper started to move, lumber was moving, sugar. You go down the list of any of these commodities, and they all started to move. But the common denominator is that gold was the one that kind of got the party started, and people kind of got very bearish on gold going forward because they were like, I can't believe gold isn't going up. This environment, the inflation, the this, the that, and really like people don't understand that gold doesn't move just with inflation. Gold is the one that warns you of inflation. And then it can move in these inflationary cycles. And also one of the best things about, and this is why people hold gold for years and years and years, is not because it's just going to make you rich. It's because it's going to hold its value. And if you look at it through 2020 through 2023, like it just held its value. It continued to just stay sideways, holding its value, chopping around, and then it broke higher finally. And another thing that gold bugs don't like to talk about much is that gold really does like yields falling. And so looking at this environment and gold's moving up with yields moving up, that might be telling us a couple different things. It might be telling us that yields are going to start to move lower at some point soon. But the other thing that it might be telling us is that how strong and resilient gold has been in a cycle where yields continue to fall. Yes, we're talking about real yields when we say yields, but at the same time, we mean that gold is showing relative strength in an environment that it sometimes doesn't really like. And that's a big thing. So yeah, look at bonds right there. You know, that's a yield, bond yield right there. Looks very similar to that chart I sent you guys on CRB USB. That's quite interesting. But if we look at the yields here, it's the same thing. You know, we're seeing that lower high here, possibility of a breakdown, possibility of a move higher, and it could go two different ways. It could also be, hey, gold's moving up, it's warning you here, and then yields move higher, and then oil follows that. So there's a bunch of different ways to look at this market right now. I think the best thing you could do is continue to read and react. Look at the 10-year yield and go, okay, well, maybe here I'm gonna, like Stephen Drew channel here. And you go, okay, maybe if it breaks down here, I'm looking for this. Maybe if it breaks up here, I'm looking for that. So for example, if it breaks up, you'd be looking for oil to possibly have more upside. If it breaks down, you'd be looking for gold to have more upside.
Maybe copper too. Would you throw copper in that?
So copper usually, which is even more interesting about this environment, copper usually runs with yields and oil. It doesn't run right with it every single time. And commodities are a very interesting thing because of the supply and demand dynamics.
Mhm.
So sometimes you can have them moving completely in the opposite way of everything else or how it's supposed to move. But usually copper signifies global growth. Usually copper signifies growth and inflation moving higher, which most of the time when you see that, that means yields are moving higher.
Yep.
So I think it's you could look at it a couple different ways. At the end of the day, what I always do is, hey, let's ride the trends. Let's see where they end up. Let's not get ahead of ourselves and go, hey, I don't know, yields are kind of moving down, but copper's in an uptrend, or yields are moving up and gold's in an uptrend, so I can't buy gold anymore. Like, don't do that. Just ride the trends, but also watch the intermarket analysis. Pay attention to what's going on so you could pay attention to whatever new headwinds might be thrown your way.
Do you want to, since you're doing your intermarket thing right now, you want to just touch on the dollar and what that means to you and what you think it means to commodities?
Yeah.
How important is it? Let's start there.
I think the dollar is incredibly important. Can you go to a more long-term chart?
Yeah, but this year so far, this line has gone up
Mm-hmm.
along with commodities. What say you?
So when I'm looking at it, most of the time, if I'm looking at commodities in the dollar, I'm not usually thinking about every single move higher or every single move lower. If it's in a range, it's range bound. So I go, okay, the dollar is range bound and commodities are moving higher. That's usually going to tell me that moving forward, that the commodities, if the dollar starts to break down and continue down, that the commodities are going to move higher quicker. So people kind of get into this correlation, and you know this, you guys both know this. If you're looking at the market, you go, correlations have to be this, and this is exactly what should happen. And if the dollar goes up, commodities have to go down. And it's not that way. So most of the time, it's if the dollar is in a range-bound zone, that's telling you that there's a possibility of of commodities moving higher or stocks moving higher within that range. But if the dollar continues to move higher, that's telling you something different. Think of back in 2022, beginning of 2022, there was every reason to say, hey, why is the dollar moving up with commodities? And it wasn't just with commodities, it was commodities moving up in such a crazy way that most people have never even seen it before. The stock market was moving down. Commodities are moving up every single day for most of Q1 straight through. And the dollar continued to move higher, and nobody really looked at the risk there. People were like, well, the commodities are moving higher, the dollar's moving higher. It's just the way, maybe the world's changed. Right. And really, it's a watch out for headwinds here. Watch out. The dollar is trying to tell you something here that at some point that's going to change. And then the dollar tops out, and then we get a kind of a bull market ever since. So the dollar is the most dynamic piece of this market. I think too many people just kind of avoid it, don't pay attention to it. But it's not only that the dollar and stocks can't go up together, or that commodities and the dollar can't move up together. It's the fact that you can figure out areas that you want to be invested in by looking at the dollar. If you're in a weak dollar cycle, most of the time, or even a range bound dollar cycle, and the commodities are starting to move up, you're going to look at the reflation trade. Okay, I'm going to look at energy. I'm going to look at copper miners. I'm going to look at gold miners and so on. Like, that's something that you can look at. And then if you go, hey, the dollar's moving up really quickly, you can go, maybe I want to be a little bit more defensive here. Maybe I want to get to cash. Maybe I want to move away from things. So the dollar is the most dynamic piece of the macro puzzle that we ever really get to lay our eyes on. Now, you have to understand that it's heavily weighted in the euro. So when the euro is really weak, sometimes it can give you some false signals. But right now, we're also seeing other things start to move up, like the Aussie dollar. You know, the Aussie dollar is also an interesting one right now. We're seeing, let me pull up my chart too. So the Aussie dollar is starting to move up, and it's been moving up for a month in a very strong way. And most of the time, because Australia tends to move with commodities as well, especially copper. Now we're starting to see some strength in Australia. Does that actually start to break out? What's that going to tell us? And so if we actually do see a major breakout in the Aussie dollar, what's that going to tell us going forward? If we look at, the yen, for example, the yen continues to just crash. So what does that mean about the yen? So JPY USD, I do those charts like that all the time, actually, because I'm a futures trader and I do trade the yen long. So this is how I'm always looking at the chart too. So I'm glad you brought it up this way. Everybody gets mad at me about it.
I always want the dollar in the denominator.
Yes, I think it's the easiest way to look at it. And also, if you're a futures trader, that's just how you trade those anyway. But it continues to break down. So what's that saying? You know, that's saying a lot about Japan, but what's that saying globally? Globally, usually that means commodities are getting stronger. Usually that means that we can see some more inflation on the horizon. So the yen continues to just crash here. So, you know, once again, it's this macro puzzle, and everything against the dollar is very important. And if we look at the Great British Pound is another one that's actually held up a lot relative wise. Like, it's actually shown some relative strength to everything else, where all the rest of the currencies aren't looking too great. I'm not saying the pound is looking awesome. I'm just saying it's just kind of range bound. So these are all things you could continue to look at going forward to see hints in this market.
That's right.
Is the pound breaking out? Is the Aussie dollar going to break out? And if you can kind of see those, then you can kind of look at the dollar and go, okay, maybe the dollar is going to break down here. Or let's say they go the other way.
So this range in the dollar, we've been here for a year and a half now, right?
Mm-hmm.
Sideways 200 day. So maybe it's not so much, we're looking at this one little wave here that began at the December lows, right? It moved higher. But like you said, it moved higher within a range. Right? The market is smart enough to say, all right, dollar's higher this week or even this month or this quarter, right? But it's still in a range and it's still trendless, right? So not necessarily a headwind. I think it's not until we get some sort of resolution, either up and out of this range, right, where the dollar actually becomes a headwind for risk assets, or resolution through the pivot lows, right, to the downside, and then the dollar becomes an intermarket tailwind, right? Maybe a bullish catalyst for risk assets to move higher. As long as we're still stuck in here, I don't think there's much of a signal at all.
Exactly.
Tailwind standpoint, I think it is what it is, and the dollar is probably not going to impact risk assets too much until we get some sort of resolution, because then the market says, okay, dollar's not just lower today, this week, this month, but it's probably headed lower over longer time frames, right? And then you start to see that risk asset tailwind.
Like, for example, the example we just talked about in 2022, if that, let's say it breaks out here and energy's raging and like there's some war on the horizon or something, that might be telling you, hey, it's time to back off of stocks very quickly. Maybe it's time to run away, and I think too many people, they get stuck in it either has to be a bull market or a bear market. And that's your thesis that you have to live and die by. And it's like, no, like you can have a situation where, hey, things are moving up, but there's some possible headwinds here. And we have to just look at the headwinds, evaluate, and wait for, like you said, there's no signal yet. But if we get a breakout, that's a signal. If we get a breakdown, that's a signal.
Spencer, you want to come in here and hit us with some earnings and news, and then we could do recess. Jason, you've been here. Thank you for being so generous with your time. You've been here for 50 minutes. You want to just hang out for another 5-10?
Yeah.
Awesome. All right.
Run
Yeah. What you going? I was not going to run a bumper, but you want me to run a bumper?
I want you to run a bumper. This is
Run a bumper.
official.
All right. I was already to run the recess bumper, but I was jumping the gun. Let's do a couple earnings, couple headlines real fast, and then we'll do some recess. It'll be fun. Trust me. On the earnings front, we had Take-Two report. Actually, I think it was a mixed report, but the stock is up about 4% today. They also announced their next Grand Theft Auto not coming until late 2025.
So
That's kind of
on that, I did not buy a PlayStation just to play Grand Theft Auto, but I still want to. That game looks like so much fun.
Yeah, I've never actually played any of them. Fun fact.
Personal update. In my life. Still not enough time for video games.
This is a video game. What we're doing. That's what this is.
This is my game, yeah.
That's true.
All right. What else did I have? I had Raw Stores, which is flat, and then AMAT Applied Materials, which is was up, now red on the day. Mixed report. I think it was a beat for them, but I'm looking at the charts and not what the numbers were just now. On the news front, Reddit inked a deal with OpenAI, so they're going to let OpenAI use their content, their APIs to train their algos. It's a train chat GPT. Also going to.
What company?
This is Reddit.
Oh, wow. Yeah, I see that. Up 10% partnership with
you see that. Exactly. GameStop pre-reported some numbers that were not great. And then they also announced a mixed shelf offering. They're just going to sell everything that you could want. They're going to sell it. They're going to sell stocks. They're going to sell bonds. They're going to sell notes. They're going to sell it all at you because that's what you do, I guess, in the meme stock rally.
And they had earnings today also?
No, they didn't. It was just a pre-report, and it wasn't great. So,
okay,
it's the same business. We talk about how fundamentals don't matter in short squeezes. They don't. But stock has a high short interest for a reason. It's not exactly a winner. So, there was that.
You see this big upgrade for Robinhood from Bank of America?
No, did not see that one.
7% today.
Yeah, stock market, Mike. I agree with you. It's a few days late on the part of GameStop to do an offering, but hey, what are you gonna do? Elsewhere, I've got actually I didn't see this. Sean was the one that posted this in Slack. I missed it yesterday. The CME Group has filed to allow spot Bitcoin trading, so that could be fun. That could be fun. Yeah. All right.
No surprise there.
Yeah. And then the last headline that I've got, it's a bummer that JC is not here because JC is very into this idea right now of restaurant stocks, and they're being very good at restaurant stocks, very bad at restaurant stocks. We got a bad restaurant stock here in Cracker Barrel. They also pre-reported and they cut their dividend from $1.30 a share to 25 cents a share. They announced all kinds of new initiatives. They're going to realign the company and change the strategy and change the restaurants and this, that, and the other, but whatever. It's still Cracker Barrel, and they get a lot of their business from people just driving on road trips, and that's not good when people don't do that. So
whenever you hear words like strategic transformation plan, you run. That. And then the dividend cut. I guess the term for that is capital allocation changes to drive sustainable long-term allocation.
That's exactly right.
That's how they say dividend cut in a press release, right?
I don't know if you saw the press release today or if you're just assuming, because that's exactly what it said.
I saw it.
That is literally what it said.
So Advanced Micro Devices. What's this about Microsoft and offering their AI chips?
Oh yeah, that's right. There was they're gonna allow. I saw that headline as well. I don't think the stock is moving off of that or anything, which is
That's significant in my mind because I've been told over and over and over again that AMD has the inferior chips. So if Microsoft's going to use the AMD chips instead of the NVIDIA chips, this is Microsoft. It's not like they don't have the money to buy the expensive chips. So what's that about? I don't know. Right?
I don't know. Yeah, I mean,
good for you, AMD. Risk reversal. AMD against the prior cycle highs. Let's go. Spencer, you selling puts?
In AMD, I had a trade on. I'm not long anymore. So.
No one wants to sell puts with me, Jason. It's a problem.
Yeah, because there's no juice, Steve.
Are they naked puts? Are they, what are we talking?
Just any. Some long calls, I thought.
Nice. Yeah, I mean, the game is always selling puts makes a lot of money, but it also can lose a lot of money. So it's a tough sell.
Yeah. What is that risk reward they call it?
Risk to reward. Yeah.
All right, I'm good with the news. That's
last one I had was Doximity up 18% this morning on their earnings report. I don't even remember what they do, honestly. But
so that was the big report of the day, huh?
I guess so.
This is not like a DocuSign.
No.
Okay.
I used to know what they do.
No, it's not.
Not important.
You guys are so good at earnings.
Right? Right? I think so too. Jason, they really love you in the chat. I'm so shocked.
Oh, really? Cool. Yeah. Nice. I try not to. My ADHD will literally suck me into that, so I try not to pay too much attention. But thank you, everybody. I appreciate it. I'll if anybody wants to hit me up, please hit me up. I always message back. Try to give good answers. I was also a new trader at one point, so I always try to remember that.
And Jason, you like us, you enjoy doing this kind of stuff.
I love it.
Educating.
Well, I think that's something that's I haven't talked about much, but it's important, which is when I was a kid, I would bother when I was a professional bike rider. I would bother, well, not before I was a professional bike rider, I'd bother everybody I ever could to try to learn stuff. And I remember this one pro, I would an AOL Instant Messenger. I would hit him up every single day after day after day. Hey, can you tell me how to do this trick? Hey, can you tell me how to tail whip? Hey, can you tell me? And one time it was 5 a.m. He was like, can you just talk to me during normal hours? And so I try to always remember this. And I was the same way when I started trading. Hey, can you tell me this? Hey, can you teach me this? Hey, show me this. And really I try to remember those things when people reach out to me. So I can, still say, hey, what's up? Hey, this is how you do this. Hey, this is how I learned how to do this. Hey, this book is great. You should read this. And number one, you're probably going to get mad at me because I'm going to do the same thing that every good trader ever did to me, which was say, here's a book on risk management. And then they're going to get mad. However, that is really the secrets of trading.
Yeah. Go read a book.
Hey.
What?
Yeah. What's the book?
On risk management? The Van Tharp books. Any of the Van Tharp books are great. I always suggest the Van Tharp books, Bollinger on Bollinger Bands, Market Wizards. People go hey, I read this whole book. I don't really know the secret. It's something about cutting losses short and letting profits run, and it's that's the secret.
Nailed it.
Yeah. If you want to really learn how to trade well, it's understanding the volatility of each product you trade. Understanding, what maybe back testing is, because your eyes as a human, will deceive you. So you understand back testing, understand the how close of a stop can I run and still have a profitable trading strategy? What's my time frame? Then really write down your methodology. What's your methodology? And then it's all your mental health. Can you be normal enough to continue to wake up and push the buttons day after day?
One of the hardest parts.
Mm-hmm. That's the thing I will always struggle with and try to work on and try to get better at, because at the end of the day, whether you're systematic, discretionary, you're the ones who has to push the button. So your mental health has to be above everything else.
You doing a show today?
Yes. What day is it? Is it Friday? Yeah. So Friday we have that 11 show today. You coming on?
11 o'clock?
Yeah. 11 o'clock.
I'll be there.
All right.
Hey, speaking of AIM, we need to bring back away messages, I think. like for
Ooh.
Slack, for
Love it.
Twitter, for anything. I need the away message was such a great technology. It was you giving the finger to everyone saying, "Leave me alone. I'm not here right now." We need to bring that back.
Well, you have it for driving in your iMessage. Like you can do that when you're driving in the iMessage. But yeah, you're right. It should be on everything. Everything
should be. I had hundreds.
Recess.
All right.
Trades to make.
We always end the show with recess. I'm going to end it right now with recess, and then we'll hop out.
All right, let's go Knicks. That's my recess.
Ooh, I want the Knicks to win so badly. If I could play like anybody, I wish I was playing like Jalen Brunson. Man, that's my guy. I've always loved that dude's game. He plays like he's like 7 feet tall, but he's like my height. It's awesome to watch. When we having some games in Sonoma, basketball games.
We better.
Yeah.
I heard there's a court. There's also a bocce court, which I'm so interested in.
Wait, do I have to bring sneakers? All right.
Probably got to bring sneakers.
Yeah, bring some,
all right.
Bring some kicks.
All right. 8:30 tonight. Knicks. Pacers. Game 6. Be there.
All right, guys. Happy Friday, everybody. Thank
Happy
you
Friday.
for
Hey, we're on a week and a day break. We'll be back on Tuesday, May 28th. Have a great weekend. Have a great week. Have a great Memorial Day, everybody. You two, I'll see you in a couple days.
Yep.
And let's all go make some money.
And congratulations, morning show. 1 year.
1 year. We made it.
Great job, guys.
Yes, chat.